Hey everyone, and welcome back to Wall Street Radar. I'm your host, John Peterson. Today we're diving into Intel's Q3 2025 report card, a deep dive into a tech giant that many of us have a complex relationship with. This report could signal a significant shift in their trajectory. Frankly, watching Intel's earnings over the past few years felt like watching a classic tragedy, often bracing for the worst. However, this time, the Q3 2025 results suggest things might be different, with some surprising positive indicators emerging. Q3 revenue hit $13.7 billion, not only exceeding guidance, but also achieving a 3% year-over-year growth. This indicates a crucial stabilization of their financial performance, moving beyond previous declines and setting a new baseline. More critically, profitability is bouncing back with remarkable strength, as the non-GAAP gross margin soared to 40.0%. This represents a full 22 percentage points higher than the same period last year, showcasing solid progress in their financial recovery. Intel's leadership stressed execution and cost control, acknowledging past organizational complexities and bureaucracy that stifled innovation. They are now seriously addressing these issues to streamline operations and improve efficiency. OpEx was drastically cut by 20%, and they even lowered next year's CapEx target by another $2 billion. This demonstrates Intel is learning to live within its means, a significant shift from their previous spending habits, reflecting a new era of fiscal discipline. Now let's talk about their real future, IDM 2.0 and AI. Intel's central narrative is to design, manufacture their own chips, and also manufacture for others, positioning themselves as a key player in the global semiconductor landscape. AI is accelerating computing demand across various sectors, and Intel is strategically leveraging its x86 CPUs and extensive ecosystem to lead in emerging areas like AI PCs and Edge AI, adapting its core strengths to new market needs. They are also actively developing specialized ASICs and accelerators, such as the Gaudi 3, in a determined effort to chase down NVIDIA and compete fiercely in the high-growth AI hardware market. Second is the foundry business, a critical component of their IDM 2.0 strategy. Intel must prove they can deliver the promised 20A and 18A process nodes with consistently high yield and on-time delivery, a challenge they are committed to overcoming. The 18A process node, notably the earliest 2nm class node developed in North America, features groundbreaking ribbon FET and PowerVia technologies. These innovations are designed to deliver enhanced performance and energy efficiency for future generations of chips. These core technologies deliver up to 15% better performance per watt and up to 30% better chip density versus the Intel 3 process node. This significant leap in capability positions Intel to compete at the forefront of semiconductor manufacturing. However, recent reports indicate challenges with the 18A node, including high defect rates and a perceived lack of new customer interest. These hurdles highlight the complexities and risks inherent in advanced process technology development. Despite these challenges, Intel has secured Microsoft as a major foundry client for its 18A process. Microsoft will manufacture its Maya 3 chip, codenamed Griffin, at Intel Foundry, marking a significant win and a vote of confidence in Intel's manufacturing capabilities. This earnings report gives investors two main signals: improved financial stability driven by cost controls, and a clear strategic focus on AI PC and their core business, leveraging their existing strengths for future growth. However, significant risks remain, including potential process technology delays or yield issues with their advanced nodes, and intense market competition from aggressive rivals like AMD and NVIDIA, who are constantly innovating. Intel is undergoing a painful but necessary metamorphosis, transforming its operations and strategy. This report tells us they are still at the table, having been dealt a decent hand with their recent financial improvements and strategic focus. But whether that hand wins or not depends entirely on their ability to deliver their process ace, the successful execution of their 18A process node in the next few quarters, which will be crucial for their long-term success. Do you think Intel can pull it off and overcome these challenges? Are you willing to bet on this semiconductor giant's turnaround? Let me know your thoughts and predictions in the comments below. Don't forget to like this video, subscribe to Wall Street Radar for more in-depth analysis, and we'll see you next time for another market update.